Welcome to the FX, and here we're looking at the US dollar. And yesterday we were looking at this situation down around here, looking at this as being the wave 2 here, and in terms of an A wave, a B wave, and a C wave here, and that seems to have panned out quite nicely. We've got an impulse wave starting to the upside in terms of the 1, the 2, the wave 3, the wave 4 pulling back to 38% of the third wave through here, so that should sort of settle in around here, and then we should see a move further up here as 5 waves. However, in the bigger picture, if I can just, where have I got the bigger picture here? It's even smaller. This situation here, what I want to point out here is that this still has, just as I mentioned then, still has a little 5th wave to move up through here. But this here can be counted as an A and a B and a C wave and fade from here down through to here. However, this little 5-wave structure that we're tracking through here can be the C wave, of course, but it could also be wave 1 as well, and we would get a move back in terms of an A, B, C, and then further upside. So in terms of trading the euro and the other crosses as well and whatnot, this is pretty much what we're looking at through here. You know, it's a little bit like the indices as well. With the indices, we've only got 3 waves down and not 5 waves down. So, you know, we could be dealing with a corrective pattern as well. So it's just that the bonds are going to be moving higher. So it's just sort of suggesting this, you know, this would be in line with that and move higher still. So that's what we're sort of looking at here. We won't know, but we just need to navigate through this point here, and once we can work out that we do have 3 waves down from here, then we know that we'll know it's 3 waves, because once we do have our looking like 3 waves here, once we get a move up through here which gives us an overlapping wave structure of this move here down, then we know that confirms the 3 waves, and then we know that top will be taken out through here, and we'll be heading further up here reasonably swiftly as well. So let's just see how this little 5th wave here falls into play. Just into here. I'm not sure about this particular spike here. We may have this as a wave 1 and wave 2 here, but spikes in the market these days with the bots out there and them stuffing, quote stuffing as they call it, leaving no orders in the depth, just an empty market shell place there. So you've got to take them with a bit of with a pinch of salt, so to speak. But anyway, we won't totally ignore it, but we'll just stay with this move here as wave 1 and wave 2, wave 3, and that should finish just in here. And this, obviously, you need to keep a really good sort of eye on this situation here because of because whatever market you're trading, so to speak. So we should see some sort of corrective pattern here as such before we see any further upside in wave 5, which should be around the same length as wave 1 there, and then we'll see a 61.8 retracement level from this low here to where that high is back into here, the 80-40 sort of area again, and push up from there. So we've still got sort of 2 or 3 sessions before we see this completely unfold as such here. If we're going to see a bullish pattern, we'll see it like this here, and we'll be back in on it over here, so to speak. But otherwise, it can just fold from here and give us 5 waves down from here. So it'll be in this little juncture here that we need to keep an eye on things. And obviously, this reflects directly into the euro situation as well. Once again, the move down through here is only in 3 waves. So there's different ways of looking at those 3 waves, but in terms of the 1 here and the 2 to here and the 3 to here, or the AB or the A, the B and the C, so to speak here. So we can't confirm that to the downside. We know that in the bigger picture, if I can just pull up the weekly chart here, on the weekly chart here, you know, we've got this trend line coming right through here, and we know that it's placed pressure, you know, on this high here, and we're watching this unfold here. So there is potential downside from here, but at the same time, we also know that it's above certain levels here that give it a bullish bias as well. So once again, we need to see it work into a corner, and you know, this is what we're looking for here, the next corner for it to work itself out. Just coming into the hourly chart here, and you know, and dealing with what we know, so to speak, is that we're looking at this being well, I've got it down for 1 here and back for 2 here, but it can also have a smaller wave 1 in here and wave 2 to here, and a third wave in here, a third wave in here, but this will just be, there'll still be still more to go in here. If I just drill in here again into this one here, we can see it better here. So we can treat this down as 1 here, an A and a B and a C, back for 2 here, and this is the third wave down through here, so we can bring that in here. So we're looking for a fourth wave. The 38.2 retracement level is back up near the 137, so we can treat it as a retest of 137 here. It's not quite there, I don't think, but we just have a look here for a moment. You know, same as the US dollar doing its thing, 38, so it's pretty much there. So we'd see this move you know, up into this space here, and then make a new low here, which would be the wave 3 here as such, right? And then we'd see the wave 4 pulling back into here, and then down again, if that's the case. But if it's just the ABC, it'll finish here and move back up. So we won't be bullish unless that 137 becomes the retested resistance. As I mentioned yesterday or over the last few days, that if the 72 here, the 1372 here, 20 becomes a retested resistance, which it was there. So it came down to support, the bounce, the breakout through, the retest that failed, and then you short from here. So that's the short term setup there. We'd probably have a look at that on a on this thing here. Yeah, see, it's pretty much perfect. It's just the classic trading levels pattern the other way around. So it's on the short side, so it's just the support, finding its retest here, back through here, the support becomes the resistance, and then it just drops straight through here. It normally moves quick in these moves here when it takes out new lows, because all the stops are sitting there, same as here. All the stops will be sitting there, so the computer just trips them out. That's why they move quite quickly. All right, moving on to the Australian dollar as well. It's been quite sort of interesting. This, I mean, in the bigger picture here, if we can just take a look at that for a moment. You know, this weekly chart here is one of the counts that we have in play here, with a low in here already, and we're looking for basically 5 waves up, for 1 here, an A and a B and a C here coming back is what we're looking for now, and then pushing up from there. But this push up from here could be, you know, a further move up here, or it could be just an A and a B and a C in terms of this pattern here on the weekly here, where we've got an A wave, a B wave, and a C wave as wave 4 here, and then wave 5 down through to here. It's just the 2 counts that I have for this market, and we just need to work through them all. The 90 has been, when it first arrived up here, we said that it would, you know, spend some time here and vibrate across this level for some time, and then, you know, it would find it as support or resistance. And as far as I can see so far, it doesn't have it as support, and it doesn't have it as resistance. And in fact, it's more of a supporting thing for me, because it's actually sticking to the level as such. It would have to take out it's still sticking to it. It hasn't sort of retested and failed it so far. This was a retest here, but it didn't take out this low here, so it didn't fail as such. It just took it out by a tad, but jumped back. But look, it's still some type of corrective pattern. The best way I can figure it out is putting the wave 1 high up here, and we've got 5 waves down here, so we can call that the A wave. We've got 3 back up here. We were looking for 5 yesterday coming back up here, as you know, in terms of Oh, well, in one of these anyway, I have to get on there intraday. But look, as it stands, this is the 50 and 60% retracement level, so it can move back down into these levels here, but we must treat it as a negative market being under 90 because obviously the supporting orders have moved out of there. It does count as 5 waves to the downside here in terms of 1, 2, 3, 4, 5, but we've got overlapping wave structures here, so it's probably not the best count for there. But we also know there's support here, so it's going to be, you know, it's not like a good shorting opportunity into these old lows here. It's normally the 4th time it tests something that it would move through. So just drilling into that a little bit further through here. The way that I've counted it to the downside here from this high here is 5 waves down here for wave 1, back for wave 2 here, and then down for wave 1, back for wave 2, and then wave 3 moving down through here. Okay, so we're getting wave 4 now, and then wave 5 down to here where we'll get another bounce back into wave 4. So a choppy environment through here, and obviously it's doing the mirror opposite to the US dollar. So the euro and this will all be doing pretty much the same. And moving on to the euro Australian here. So what we've been looking for, we'd looked at this move down through here and we were looking for 5 waves down. We've only got 3 waves down, and we were looking for this to come back and retest this trend line, and it's done that, but it's still doing it. So, and it does look rather corrective pattern moving up through here. And yes, it can go higher, but we just need it to play out. We haven't seen it, you know, show any sort of weakness. We would only turn bullish if the 153 became a retested support. That's the top of group 1, and it would have to find support up there and make a new high from there. So it's a bit of a rock and a hard place at the moment for this market here. I can see on the intraday level here that it will push higher, but it's just it's just corrective patterns all over the place here because we've only got 3 waves here. You know, we've got 3 waves here, and then we've got an A and a B and a C to here. This is starting to look like a little impulse wave coming up through here in terms of the little 1, the A, B, C here, the wave 3 here, the wave 4, which need to stay above the top of wave 1 here, and then pushing up here for 5 waves. If we've got those 5 waves here, then we can expect a counter trend and then another move to the upside here. If this moves down through to here, then it makes this an A and a B and a C here if it overlaps this, and that creates the bearish picture. So then it would be 5 waves down here, yeah, as sort of wave 1, and this would be an A and a B and a C back for wave 2 here. So you could look for shorts at 152.50 as a retested resistance because it would confirm that we've got 5 here and 3 here. The pound yen and the euro yen as well, but this pound yen here in the bigger picture here on the daily, we're considering this the wave 4 here, and we're looking at this as an A and a B and a C down through to here, and we're looking at this being a wave 1, back for wave 2, and up for wave 3. Now, the thing is that the wave 2 here hasn't really pulled back the 50-60% retracement level here, so it could end up doing that at here. So if we are going to go long, then we need to really have a good setup through here. So let's just investigate that a little bit more. We can see that for quite some time now we've had this corrective pattern moving across here, and you know, it's sticking there and it's supported there and whatnot, and we could call it in as wave 2 here, either to here or to here, but this is the 50 and 60% retracement level here, so it can move down through here. So we just need to be mindful. It would be something like this, down for 1, back for 2, 3, 4 and 5, something like that as a C wave, and then moving up from that point. So we don't know that just yet, but we don't want to miss the trend to the upside. So if the 171 becomes the support, then you can consider that the market would move up from there. But in this range here, it's a bit choppy and a bit dangerous. In the euro yen, It's the same sort of picture as well on the daily here, looking at this as an A and a B and a C. We knew that the move up here would run into this block of supply here, sellers here, and that's the 50 and 60% retracement level, and that's, you know, that it is, you can see that it's finding pressure there. And if it did move down, well, then this is the 50 and the 60% retracement level from this move up through here. So once again, you know, we could expect, you know, a larger correctional pattern to come in here and then retest supply back up through here if that's going to be the case. So this wave structure up through here in part is quite easy to understand, but a bit like the Australian dollar as well. It's just a bit there's some odd structures going on up here. So look, the 140 is a bit of a line in the sand here. It, as retested resistance, would obviously see further downside from that point there, but as it stands, it's sticking to that 140 there, and can push a bit higher in little 5 waves up, like the other market was the pound yen was looking at as well. But look, if you're going to go along here, it would have to be up at 140.50 here. Otherwise, we're looking for further selling pressure to the downside. So just another little count here that I was looking at in terms of 5 waves up, an A and a B and a C for the downside here. But there is, you know, there's obviously some pressure here as well. So the 140 as a retested resistance here. This is the little 5 waves that I was looking at through here. So we can have a little low in here. If we get 5 waves here, that will give us 5 waves rather here, if that's the case. And then there would be the A, the B and the C here. Then you could look to build long over this side over here if you wanted to. But you know, any sort of finding this as resistance here, you'd be looking for a break short from that side there. And currently this is only 3 waves up here. So if this does move down through here and overlaps the top of wave 1, then you know it's bearish from that side there as well. So yeah, it'll just depend on what the US dollar does in terms of after it displays its 5 waves to the upside. We just sort of recap that actually here. So what we're sort of really waiting for with everything is this 1, 2, 3, 4 and 5. That's pretty much a bit of a standard it'll play out, but we don't know if this is a wave 3 or wave C. So in both cases, it will see some move down, back down into the 840 area here. Once that's occurred here, then if we do get support on the 850, 8050 up here, then we know we're going to be going higher, and we'd also be going into a larger trend to the upside. If it fails from here, then we know that we'll be looking at a bear market here, and then we'll find our trends in the other currencies at that stage there. So hopefully a couple more sessions, and it will start to shine a bit of light on it, perhaps 3 sessions, but maybe 2. All right, cheers.